Dear students, our next topic is accounts. Under double entry system of accounting, each transaction has two aspects, one debit aspect and one credit aspect. As per dual aspect concept, at least two accounts are involved in a transaction. Minimum two accounts are involved in a transaction. Account is a record of transaction under a particular head. It records not only the amount of transaction but also their effect and direction. Accounts can be classified in two ways, traditional approach and modern approach. Under traditional approach, accounts are classified in two groups. Personal accounts and impersonal accounts. Accounts which relate to persons are personal accounts. Personal accounts are accounts which relate to persons, that is, individuals, firms, companies, debtors, creditors, etc. Examples of personal accounts are accounts of Ram and Company, accounts of Mohan, accounts of Kumar, etc. The main purpose of preparing a personal account is to determine the balance due to or due from persons or organizations. The main purpose of preparing a personal account is to determine the balance due to or due from persons or organizations. Personal accounts are classified into three: natural personal accounts, artificial personal account, representative personal accounts. First, natural personal accounts. The term natural persons means persons who are creations of God. Therefore, natural personal accounts will include accounts in individual name. For example, Ram's account, Asha's account, Kumar's account, etc. Artificial personal accounts. These accounts include accounts of corporate bodies or institutions or companies which are recognized as persons in business dealings. For example, the account of a limited company, the account of a club or a cooperative society, etc. Then, representative personal account. These are accounts which represent a certain person or a group of persons. For example, rent payable to landlord is debited to rent account. Then next is impersonal accounts. Accounts which are not personal or impersonal accounts. Example, machinery accounts, cash accounts, bank accounts, etc. Impersonal accounts are divided into two: real account and nominal accounts. First is real accounts. Real accounts are those accounts which relate to tangible or intangible assets of the firm. Example, land accounts, building accounts, investment accounts, etc. Then nominal accounts, accounts which relate to expenses, losses, gains, revenue, etc. are termed as nominal accounts. Rule of debit and credit under traditional approach. Rule for personal account: debit the receiver, credit the giver. Debit the receiver, credit the giver. And rule for impersonal account. Impersonal accounts are divided into real account and nominal account. Rule for real account is debit what comes in, credit what goes out. And rule for nominal account, debit all expenses and losses, credit all incomes and gains. Rule for personal account, debit the receiver, credit the giver. Impersonal accounts are of two types, real account and nominal account. Rule for real account is debit what comes in, credit what goes out. Nominal account rule, debit all expenses and losses, credit all incomes and gains.